Hey guys, this is Brian, and today I wanted to do an audio only type of video here. So just feel free to listen to it in the background. The only real visual element will be this chart here, which is going to be the equity curve, and I'll explain it a bit more. But essentially, I wanted to talk about something in regards to compounding and with R's that I think will help a lot of people. I think there's a bit of misunderstanding as to when to start, but really the time is now. Um, some of this won't make sense if you haven't followed me on Twitter or have been reading some of the things I've been saying recently, because this is all in that context and is meant for that audience. So if you haven't already, just follow on Brian Lee at Brian Lee Trades on Twitter and just read through maybe the last 2 or 3 weeks from June 12th. Okay. All right. So I wanted to talk about how this equity curve was formed and why it looks this way, and how the peaks and valleys of your journey might look similarly, or maybe how you can achieve similar results. So, back in January, I wrote a blog saying that I basically lost my account, and so that I needed to completely reset. And the beginning of this chart represents that point. Now, just a little bit of context. I was going through some hard times in my life, my personal life, and I also was recovering from the biggest loss, or more like losses, of my entire career, which are generally enough to take out any trader, the Widowmaker. So let's just start at the beginning here. Starting out, we are fresh. We are saying that we can do it, and we take a little drawdown. But this is my system. I've been trading it for a long, long time, and I know that drawdowns happen as long as I keep it small. We figure out our mistakes made back in December and January, and we parabolic shoot over the highs. We're feeling confidence, and what happens next is sort of the bad habits coming back. And this is the thing about trading, is that your demons will come back to affect you, and they will hit you when you're doing the best. As you can see along this chart here, every time there's a peak, there's a valley. And, I'm sure there will ultimately be some sort of valley at this point. But that's the thing about trading. You don't have to be correct 100% of the time. You just need to be correct over the long run. And in order to create this kind of expectation, you need to understand risk reward, and you need to understand how compounding can both help you in dramatic ways, but also how it can protect you in your darkest days. So this brings me to one of the topics that I wanted to talk about, which is compounding. So recently, I was talking to one of my friends, and he was telling me that he is learning, and that he wants to use this consistent R throughout the process because he feels that he's not ready for compounding. But I want everyone to realize that compounding works both ways. When you do win, you are increasing your size. So as you win with that RR, you will have parabolics in your equity curve. However, when you're losing, you're also reducing your risk simultaneously. So what this does is it creates a scenario where now when you do lose, you're losing less than you have before. When you have poor mental capital, which is arguably more important than anything else for your confidence, you're able to mitigate the downside. And not only that, you're also able to work your way and grind out. And what I mean by this is that R's and compounding reveals who you are and what you are made out of as a trader. There's a tweet that I went back to from All Day Faders where he talks about how a beginner's P&L should reflect their learning curve, but an experienced trader's P&L should reflect how well they're sticking to the rules. So depending on which one of those traders you are, you need to understand that your equity curve is not going to be this magical parabolic and consistent uptrend with no valleys, because traders make mistakes and traders lose. And this is a real equity curve. This is me trying to recover from some of the darkest days that I've had, from potentially being kicked out of the game. But let me tell you, back in 2018, I also experienced a very similar thing. When cannabis sector was running, I was shorting most of the moves, IGC, NBEV, and those stocks had forward-looking statements where I just simply didn't learn, and I got more and more desperate to revenge trade and regain some of the capital that I had lost, because up until that point I've never had a drawdown before, not a serious one. In this case, it felt like no matter what I did, the market was not going to give me, a break. And so now, knowing that, some of the experiences that I've had were my R decreasing in half or even in a third. And so what do? Up until that point, I was making money. I was on an uptrend. I was doing really well. I knew what R I could trade, and that I was confident I could do it. But did I size up back to that when I got to half of my R? No. What I did was I stuck my nose, put my head down, rather, and I built my way back out of that compound. And for any of you who know, when you're building your way out of a compound that's 50% down, it's going to take you a long time. But you know what? I told myself I deserve this, because this is who I am as a trader, and this is what I need. This is a lesson I need to learn, because in the long run, this is nothing. This is meaningless. Why do I need to rush the process when clearly I'm making mistakes where if I was trading the same size, maybe I would have lost a majority of it. Maybe this is a lesson for me. Maybe working my way out of this, earning the right to size in, is the way forward. And from experience, I can tell you that this is the case. This is 100% true. When you're compounding and you're building your account and you're winning and you're winning and you're winning, you're increasing that R slowly. You're just creeping back. And what I find that happens is exactly this scenario. Whenever you have a drawdown and you're able to grind it back, you will experience a parabolic move over the highs, much like a parabolic move on a low float, or, a breakout on the long trade. Okay? This is no coincidence. Why does this happen? When you're a winner, you have no chip on your shoulder. Whenever I win, I delay my review as long as possible, because why? I'm emotionally placated, and I feel that there's nothing to learn. I mean, at best, I can analyze how well I traded. I can analyze and review on and think about what I did well. But what is the key to success in any field? It's making mistakes, failing hard. And in trading, you are going to fail the hardest you have ever failed in your life. I mean, I would bet on that. When you do grind your way out of these losses, these are periods of serious reflection. You learn to refine. You learn what the critical mistakes are. You learn what not to do. And it's one thing to know what not to do, and it's one thing to experience it and to be humbled by the market. When that occurs, you can set your ego aside. Psychologically, you do not want to be in that position again. You know it's unacceptable. And when someone tells you otherwise, you laugh at them and you say, man, you're going to learn this one day. Don't worry. I am not really worried about the money. I am worried about staying in the game, and I'm worried about learning I know that I'm not where I need to be, and I know that everything that I learn and whenever I feel the best, that's the time that I'm gonna get too cocky. By this point, I was only a year and a half into trading. I thought I could do it in 1 year if I dedicated 12 to 16 hours a day. No joke, I was sleeping 4 hours a day only. And I thought that I could accrue the amount of experience that one would accrue by just working harder than them. And that works in some cases. That worked for me in my gaming career because I put in the work. And it's also not about putting in the work alone. It's about being diligent. It's about being efficient with your time. A trader can say, oh, I've been trading for 3 years. But if they haven't been putting in the work into refining themselves, or if they haven't been putting in the hours every day, do you think they compare to someone putting in 12 hours every single day for a year? It's not really that close. You have to be deliberate, practicing, and refining. Now, when it comes to this chart here, I was refining and refining and refining. I made pushes, I gave it back, but I kept on going, and that's the key. When I was a professional gamer, people used to ask me, how do I get to where you are? How do I become better than the 1% in the world? And I told them, you know what? It's possible for anyone. It is. I really believe it's a matter of time. If you really work hard and you take it seriously and you persevere, because really that's perseverance, staying in the game, remaining passionate about something. That is what keeps you grinding towards those 10,000 hours, grinding towards mastery. And I didn't really learn that. I didn't really know what I didn't know until about 2 years into my journey, which was maybe, a week ago, maybe a month ago, something like this. And I'm not saying that I know everything. I'm just saying I know that I don't know. I know that there are things out there. There are skills I need to develop, and it takes time. And I know that I've been through the ringer. And I don't talk about money because money is irrelevant. I talk in R's. R's mean everything. How many people do you know who will post a P&L, but you have no idea what their risk is, how much they're making on each trade in terms of R multiple, and like how much are they paying in their fees? You realize if you're taking large positions, if you're locating large amounts of shares, it's gonna cut into your curve, your net curve, far more than someone like me. Because I've heard people, and I don't want to, I mean, no disrespect, but I was talking to one of my friends, and he told me that at times his locates could account for 50% of his gains. So you see that big number on Twitter, but what does that really mean for the trader in the long run? I'm in it for the long run, and you should be too. Up until this point, I was 3-1 only. From this point on, I decided I wanted to increase my risk reward game. And I started on a process, on a journey to find out what that meant. So I experimented heavily, but the results speak for itself. At this point here, I was trading bigger size. I was taking on more risk for this risk reward. I made mistakes. I got cocky. I told myself I could take plays that were not meant for me, that I could get away with trading setups that don't mean anything to me, that I can't really define and cannot put against like my own experience. And I suffered for that. But the thing is, I look forward to moments like this because I tell myself that these are the lessons that I need to learn. And whenever I'm here, I tell myself, this is where things get challenging. You need to expect a drawdown. I don't count my chickens before they hatch. I don't say, this is my new account. This is my profit. It's not my profit until I put it in the bank. And I will put it in the bank because this year I decided that over a certain equity amount, I will be transferring out money consistently over there. It's becoming realized. Last year I didn't do that. Last year I thought I had it all. And where did it go? This is also very good for your personal life. You're able to say next week's rent, next month's rent, expenses. These things can be taken care of. Don't make the mistake of trying to be a hotshot. Compound slowly. These spikes is not a result of increasing my size. Not once from here did I increase my size. It's been earned through compound, and it's been up 231% from that point. And now, if I ever chose to increase my risk, these drawdowns could have been manageable, yes, but you have to manage your psychology and your mental capital. And I don't know if I could afford to say, oh, I'm so good now, I am going to size up, and then this here would be like here. That is devastating, man. Even worse sometimes. And I've been through that. And again, back to the money. Last year I traded big, more than anyone I knew, and I was growing way too fast. And I paid the price for that because I could no longer handle the emotions. I know, but as a result of that those losses, I'm able to recognize where I'm able to perform flawlessly and what potentially would be my maximum size to work towards. So, I'm not trading anywhere near that size anymore, but it really doesn't matter. I would bet you that someone trading with small size or whatever it is couldn't make the same reward gains unless they were actively focused on that, because people are too focused on the short-term gains. So the goal moving forward really is to compound until that point where I know that I was most comfortable, that I was able to succeed, and to hold my compound at this point. So no more parabolic growth, just consistent stream of income. But I will draw down on the 2%. Not on the 2%, on the compound. If I lose, then I will reduce my R. And if I have a valley like this, so be it. But I'm not going to say that I can trade it all back by being where I was, because I don't deserve that. And if I trade that size consistently and I make gains and I'm comfortable, then I'll consider restarting my compound. That's the plan. But I just wanted to write this out for you guys here and help you kind of realize what it takes. One other thing that I thought about recently is that trading, for me, to start seeing things clearly, for it to kind of click, it took me 2 years. And a lot of people, they think that they can quit full stop, and I was one of them, because I was a gamer. I did something when I was becoming a professional gamer. There was no such thing as professional gamers. I mean, you could call it that, but no one was making a salary. No one was winning anything. This is not a career. This is a hobby. And I made it work through a lot of hard work and through my passion. But what that did was, by setting a goal and reaching it, and something that people don't generally achieve, something that's very special to me, and I'm always proud of it. It's allowed me to cultivate the self-belief that I could become a trader despite all odds, despite the percentages. And honestly, that self-belief is good in the long term, but I think now I realize, and this is a lot of traders will say this as well, I didn't really understand fully the scope of what I was getting myself in for. And you will learn that it takes longer than you think, that you know less than you think, and that there is so much more that you do need to learn. So that's the realization that I have at 2 years, not that I made it. And even though I'm succeeding now, I know that there's going to come times where I'm not. But the thing is here is that I learned the hard way. The most important thing in trading is minimizing the risk, minimizing the drawdown, minimizing the opportunity for you to lose lessons in your trading career. And what I mean by that is every loss is a lesson. Do not make those bigger than they need to be. Never average down. Set your daily max loss. Set your position max loss with your broker. Walk away. Learn risk reward. Tell yourself, I can make this back in a trade. I can make this back in 2 trades. I can make this back in a week. There have been times where I've literally thrown away weeks, months. And last time I checked back in January, I lost a year. So think about that. And it only takes you not being prepared, because you think about the money and you don't think about what it takes to trade and to be consistent. And that's not thinking about the money. The moment you think about money, that's it. Find where you can execute flawlessly. Add to those winners. Make it worth your while. And, I'll see you guys. I'm always helping you guys out on Twitter. Just let me know. And I hope you guys have a good weekend. Thanks so much for listening. And this is me signing out. Peace.